The kid doesn't care about that. The kid just got a piece of chocolate. He's going to run around in circles. Exactly what's going on with the market right now. Is this good long term? Probably not. In fact, I would say definitely not. Is this good short term if you're a swing trader? Probably yes. You're going to have a great day, probably even a great week. Why not?
Is this the market saying that rate hikes actually won't matter to market levels as long as it's well telegraphed?
Oh my goodness, what's going on with the market? The first time we've seen Jerome Powell go on TV and don't crash the market. In fact, the markets are exploding with joy. It's literally Christmas. Now, why is that happening? I'll explain in a second in this video. But for me to do that, first, I have to summarize what actually came out of the meeting and the Jerome Powell announcement that caused this. Basically, there are two things I want to talk about. Number one is the increase in taper pace. Essentially, them going to 30 billion per month, much faster slowdown. Now, that was anticipated. I don't think that's what's leading up to what's going on with the markets right now. That we knew about, and as expected, they went to 30 billion per month, giving us until March next year. Now, the second thing that happened was, I think it's causing this implosion of happiness in the stock market right now. The second thing that happened is basically the Fed gave us their opinion about the interest rate increase for this year, next year, 2023, 2024, and long term over 2025 and onwards. And what they said right now was way more populistic, I guess, than people anticipated. People like Mohamed Al-Arian and myself included were on record saying that we have to go way more aggressive with interest rate hikes, because if we don't, we will prevent the stock market from crashing. But essentially, we're going to be in the situation where we say, well, the operation was a success, but the patient has died. Pretty much, you're not going to crash the stock market, but you're going to cause insane inflation, which is going to put the market into a recession.
If I were them, I would do three things, which they will not do. I would, one, be very open and honest as to why I got the inflation call wrong and try to regain the inflation narrative. Two, I would go even further than doubling the rate of taper. And three, I would open it up to the possibility that rate hikes may come faster than what the market has. They're not going to do that. What they're going to do is double the rate of taper, not go beyond that. They're going to tell us that inflation is more persistent and higher. We know that. And then they're going to wrap all that up in the uncertainty packaging because of Omicron. Right. So they're going to stay behind and fall further behind, in fact.
So basically, everybody anticipated the Fed to go hardcore on rates because there's literally no choice. We're staring down the barrel of 10% inflation by the end of this year. Probably Q1 is going to be 10.5%, 11%. That's even if you trust the CPI numbers, which by definition are a little bit skewed, let's put it this way. So the inflation problem is a big, big problem. The Fed has a major credibility problem. So everybody anticipated them to go hardcore on rates, even though it's not popular. And yet, they didn't. The rates are pretty much very close to what we heard in September. So in September, we got this 0.1% this year, by the end of this year, 0.3% by the end of 2022, and I'm looking at my notes, 1% by the end of 2023. Now, what you're looking at on the screen right now is what they actually voted on. So as you can see, this year it's staying at 0.1%, no problem. Next year, everybody's talking about 0.75. There's two people talking about 1.25, but essentially the average is probably around 1%. So 3 times more than what they said in September. I wonder what changed in those 2 months, but they actually tripled their estimation, and still that's not enough. At least if you look at it as a gambling position, right? They didn't cover the spread because people thought they're going to be way more aggressive, like 1.5%, because it's really dire straits right now. But look at what's going on next. Their long-term inflation goal, most of the voters said 2.5%, which is exactly unchanged from September. So the long-term goal of the Fed is 2.5% interest, as if nothing has changed since September. And that is what's causing the market to go ballistic, because the Fed is essentially saying, well, the party is going to go on. Even when the interest rates will go up, it's not going to go up beyond 2.5%, which is way, way lower than we have to be right now. It's a bad move, and I think it's going to cause massive inflationary problems, but that's besides the point. The markets don't care about inflation in 2025. The markets care about DCF valuations, and basically once the Fed came out and said, well, long-term inflation, long-term interest rates are not going to go about 2.5%, basically when everybody expected 3.5%, 4%, that sent the market into a celebration, into a party. That's why you're seeing everything go up right now. So basically, the Fed, as always, chose the political game, essentially not doing anything too drastic, too dramatic, even though it's necessary because they want to keep people happy. The market responding Sorry, I'm just getting tired of this. The market responding in a way that's, like a kid getting a piece of chocolate and now he's happy. But yeah, but what about the tooth decay and, becoming unhealthy and whatnot? The kid doesn't care about that. The kid just got a piece of chocolate. He's going to run around in circles. Exactly what's going on with the market right now. Is this good long term? Probably not. In fact, I would say definitely not. Is this good short term if you're a swing trader? Probably yes. You're going to have a great day, probably even a great week. Why not? So let me know below if you agree or disagree. I hope you enjoy this video. As always, don't click nothing, don't smash nothing, just enjoy the video. And if you want to join our Patreon community, the link is below. It's $5 per month and you're going to be supporting our community. See you tomorrow.